Jenny from the William Factory. Happy Friday! What does your business canvas will look like? Today we'll build an ideal business planning and making the next big step for business success. This is the last of our weekly training sessions in our business finance series. Now let's get started. As for our table of contents today, we have know the customer's marketplace, key trends and opportunities, strategize for both a consumer surplus and business profits, and we have identified the next step for business success. Now let's get on to know the customer's marketplace. Here on the slide, we have customer segment, which is a crucial aspect of marketing and business strategy. It emphasizes the importance of identifying and understanding your target customer groups. The slide then breaks down customer segmentation into four main categories with specific examples. For the demographics, this category focuses on statistical characteristics of a population or specific groups within it. These are often easily quantifiable and readily available data points. For the age different groups have varying needs, preferences, and purchasing power. For example, marketing towards teenagers will differ significantly from marketing to senior citizens. The gender part, which is understanding the gender distribution of your target market, can influence product designs, marketing message, and distribution channels. The income level is a significant factor in determining affordability and the types of products or service customers are likely to purchase. Luxury goods target high income earners, while discount retailers focus on budget conscious consumers. For the educational level, education can influence a customer's understanding of products, their information seeking behavior, and their preferences for certain types of goods or services. And as for the occupation, a person's job can impact their income, lifestyle, needs, and purchasing habits. For instance, professionals might have different needs than students or retirees. Onto the geographics, this segmentation divides the market based on where customers are located. It considers physical boundaries and environmental factors. For the location, this can range from a broad categories like continents, countries, and regions to more specific areas like states, cities, or even neighborhoods. Local businesses often focus heavily on geographic segmentation. Now, the climate can significantly influence the demand for certain products like snow shovels in cold regions, air conditioners in hot regions. For the urban or versus rural settings, people living in urban areas often have different needs and access to resources compared to those in rural settings. This can affect transportation preferences, shopping habits, and products needs. Onto the psychographics, this category delves into the psychological aspect of consumers, focusing on their attitude, values, lifestyles, interests, and personalities. It aims to understand why customer makes the choices they need. For the lifestyle, encompasses a person's daily activities, hobbies, social interactions, and overall ways of living. Understanding lifestyles help tailor marketing message to their routines and interests. Like example includes health conscious lifestyle, outdoor enthusiasts, or busy professionals. Values, these are the core beliefs and principles that guide a person's behavior and decisions. Appealing to shared values can create a stronger connection with customers. Examples include environmental consciousness, family values, or social responsibility. For the interest, that's identifying what customers are passionate about, like sports, music, technology, travel, allows for targeted advertising and product development. And for attitude, these are a person's overall evaluations, feelings, and tendencies towards certain objects, peoples, or ideas. Understanding customers' attitudes toward your brand or industries is crucial for shaping marketing strategies. Now, on to the last one, we have behavioral. This segmentation focuses on observable actions and patterns of customers, particularly related to their purchasing and usage of products or services. We got its purchasing habits. This includes how often customers buy, the quantity they purchase, their preferred purchasing channels, online or in stores, and their spending patterns. Brand loyalty, that's identifying loyal customers who constantly choose your brand, allows for target retention strategies and rewards program. Usage rates, that's segmenting customers based on how frequently they use a product or service, like heavy users, light users, or non users, help tailor marketing efforts and products offerings. And now we have is decision making processes. That's understanding how customers research, evaluate, and make purchasing decisions. That's like impulsive buying, incentive research, is vital for influencing their choices. So, in summary, short, customer segmentation is a powerful tool that allows businesses to better understand their target audience, develop more effective marketing campaigns, tailor products or and services to specific needs, improve customer satisfaction and loyalty, optimize pricing and distribution strategies, and identify new market opportunities. By considering these four categories demographics, geographics, psychographics, and behavioral businesses can create detailed profiles of their ideal customers and develop strategies that resonate with them most effectively. For this slide, we have market trends. And this is emphasizing the importance of analyzing current and emerging shifts that influence a particular market. Understanding these trends is crucial for business to stay competitive, innovate effectively, and make informed strategic decisions. The slide breaks down market trends analysis into four key areas. First, we have current trends, and these are the patterns, behaviors, and preferences that are popular or prevalent in the market right now. Identifying current trends allow businesses to capitalize on existing demands and understand the present landscape. So, onto details, we have identify what is popular now, and this involves actively monitoring the market for what consumers are buying, what services are they using, what technologies are being adapted, and what styles or aesthetics are in vogue. To give an example, we have eco-friendly products. That's a growing consumer awareness of environmental issue has led to a surge in demand for sustainable, ethically sourced, and environmentally friendly products across various industries. That's like reusable goods, plant-based food, energy efficient appliances, those types. Businesses need to consider incorporating sustainability into their offering and messaging. And now, as for remote working tools, the shift towards remote and hybrid work models has driven the popularity of softwares, hardwares, and services that facilitates remote collaboration, communication, and productivity. And that's like video conferencing platforms, project management software, cloud-based services. Businesses need to adapt to support remote work both internally and in their customer solution. Now, for emerging trends, these are the trends that are not yet mainstream but are showing signs of significant growth and are expected to become important in the future. Anticipating emerging trends allows businesses to be proactive, develop innovative solutions, and gain a competitive advantage. Get the details, we have anticipate future changes, and this requires foresight, market research, and an understanding of technological advancement, societal shifts, and potential distribution. To give an example, we have AI integration. Basically, artificial intelligence is increasingly being integrated into various products, service, and business processes. This includes automation, personalization, data analysis, and the development of AI powered solutions. Businesses need to explore how AI can enhance their offerings and operations. Another example, we have health and wellness focus. These a growing emphasis on physical, mental, and emotional well being among consumers. This trend influences demand for healthy foods, fitness products, mental health services, and experiences that promote wellness. Businesses in various sectors can tap into this trend by offering health conscious options. For the cultural shifts, these are significant changes in the various values, beliefs, attitudes, behavior, and norms within a society or specific cultural groups. Understanding cultural shifts is crucial because they directly impact consumers' preferences and needs. Get that detail, you want to understand how cultural changes impact consumer preferences, and this involves analyzing evolving social norms, demographic changes, shifts in value that's like inclusivity, diversity, social justice, and changes in communications and media consumption. To get at another more examples, not explicitly provided, but could include increased focus on diversity and inclusions, influencing marketing campaigns and product development. We have growing awareness of mental health leading to demand for related services and products. And that includes changing family structures, impacting housing needs and products offering, and the influence of social media on consumer behavior and purchasing decisions. So, on to the last part, we have economic factors, and these are the broader conditions and trends within the economy that can significantly influence consumers' behavior, purchasing power, and spending habits. Give that more detail, you want to consider the impact of economic conditions on buying power and spending behavior, and this involves analyzing factors such as inflation rates, unemployment levels, interest rates, economic growth or recession, income distribution, and consumer confidence. Give that more examples. During economic downturns, consumers may become more price sensitive and prioritize essential goods. Period for economic growth may lead to increased discretionary spending and demand for luxury items. Changes in interest rates can affect the affordability of large purchases like homes and cars, and the inflation can erode purchasing power and influence pricing strategies. To in summary short, analyzing market trends is a continuous process that involves stay informed, that's like regulatory monitoring industry news, market research report, and consumer behavior. Another thing will be identifying patterns, that's recognizing recurring themes and significant shifts in the market. We also got forecasting future directions, that's anticipating how current trends might evolve and what new trends might emerge. And adapting strategies, that's adjusting business models, product offerings, and market campaigns, and operational processes to align with these trends. By effectively analyzing current and emerging market trends, cultural shifts, and economic factors, businesses can make more strategic decisions, mitigate risk, capitalize on opportunities, and ultimately achieve greater success in the marketplace. Onto the competitor analysis, a critical component of strategic planning. It emphasizes the need to evaluate the strategies and market positions of your competitors to gain a deeper understanding of the competitive landscape and identify opportunities for your own business. Let's get down to the key aspects. We have direct competitors. These are companies that offer products or service that are very similar to yours and target the same customer base. They are your most immediate rivals in the market. This means they are essentially trying to solve the same customer problem or fulfill the same need as you are. The importance of this is that you want understanding their strengths and weaknesses, pricing strategies, marketing tactics, customer service approaches, and market shares is crucial for benchmarking your own performance and identifying areas where you can outperform them. Give an example like Coca-Cola and Pepsi in the beverage industry, McDonald's and Burger King's, that's in the fast food industry, Apple's and Samsung in the smartphone industry. Let's get on to indirect competitors. These are companies that offer different products or service but still satisfy the same customer needs or wants. They might not be a direct substitute for what you offer, but they provide alternative solutions for your target audience. Basically, customers might choose their offerings instead of yours to fulfill the same underlying needs. The importance of it is that understanding these alternatives help you define the broader competitive landscape and identify potential threats or opportunities that you might overlook by only focusing on direct competitors. It encourages thinking about the customer's underlying needs rather than just the specific product category. Get an example, for someone needs transportation, direct competitors to a car rental companies would be other car rental companies. Indirect competitors could be a public transportation, ride sharing service like Uber or Lyft, or even personal car ownership. Another example, for someone looking for entertainment at home, direct competitors to a video streaming service might be other streaming services. Indirect competitors could be video games, books, or even going out to a movie theater. For the competitive advantage, this involves identifying what makes your competitors successful. Understanding their strength and unique selling proposition is essential for figuring out how can you differentiate your own offerings and gain an edge in the market. You want to identify what makes your competitors successful, and this requires analyzing various aspects of their business, such as their product quality, pricing, brand reputation, customer service, distribution channels, innovation, and marketing effectiveness. How can you differentiate? Is that once you understand the strength, you can identify areas where you can offer something different or better. This could be through superior product features, lower prices, exceptional customer service, a unique brand experience, or a focus on a niche market. Developing a sustainable competitive advantage, the goal is to find a differentiation that is valuable to customers, difficult for competitors to imitate, rare, and organize within your company. Market positioning. This involves analyzing how your competitors present themselves to the market and how customers perceive their brand relative to others. Understanding their positioning strategies helps you identify gaps in the market and determine the most effective way to position your own brand. This includes examining their market message, branding elements, target audience, pricing strategy, distribution channels, and overall value proposition. How do you want customers to think about their brand? Encompasses the long term plan for developing a successful brand, including its mission, value, personality, and how it aims to connect with its target audience. By understanding how competitors are positioned, you can identify underserved segments, unmet needs, or areas where you can offer a unique value proposition that resonates with customers. This helps you crave out a distant space in the market. In summary, conducting a thorough competitors analysis allows you to understand the competitive landscape, identify the strength and weakness of your rivals, uncover potential threats and opportunities, benchmark your own performance, develop a strong competitive advantage, position your brand effectively in the market, and make more informed strategic decisions. By constantly evaluating your competitors, you can adapt your strategies, innovate effectively, and ultimately improve your chances of success in the marketplace. So, here we have the slide of knowing your customers. This core idea is truly knowing your customers goes beyond service level understanding. It requires a data driven approach, continuous engagement, and awareness of the broader target context. The first we have is don't make assumptions about your target market. Basing your business decisions on assumptions about your target market can lead to costly mistakes. What you think your customer wants or needs might not align with reality. This can result in developing products or services that don't resonate, using ineffective marketing strategies, and ultimately failing to attract your intended audience. So instead, you do want to conduct thorough market research, validate your ideas, gather data, and continuously learn. For the second part, we have don't rely on your gut feeling. While institutions can play a role in business, relying on gut feeling when it comes to understanding your customers is often unreliable and can be biased by your own experience and perspective. Your gut feelings might not accurately represent the needs and desires of a diverse customer base. So, what you want to do is that you want to prioritize data driven insights, test hypotheses, seek objective feedback, and track key metrics. Third one we have is don't forget about your existing customers. Acquiring new customers is important, but neglecting your existing customer base can be detrimental. Existing customers are often more likely to make repeat purchases, spend more, and become brand advocates. Forgetting about them can lead to dissatisfaction, customers lost, and missed opportunities for growth. So, what you want to do is that you want to nurture relationships, seek feedback regularly, provide excellent customer service, offer personalized experiences, and encourage advocacy. On the fourth one, we have don't forget about market trends. Customers' preferences and behaviors are often influenced by broader market trends. Ignoring these trends can lead your business out of touch and unable to meet evolving customer expectations. So, what you want to do is that you want to stay informed, analyze trend impact, adapting your offerings, and innovate proactively. And last one is don't forget about the competition and potential partners. Understanding your competitive landscape and exploring potential partnerships can provide valuable insights into your customers and open up new avenues to reach and serve them better. What you do want to do is that you want to analyze your competitors, identify potential partners, and learn from both. To give it an overall summary, knowing your customers is presented as an active and multi-phase process. It emphasizes the importance of moving beyond assumptions and gut feelings by grounding your understanding in data, actively engaging with both existing and potential customers, staying attuned to market trends, and be aware of the competitive landscape and partnership opportunities. Now, let's discuss how to survive and also thrive during a recession, in which consumers cut back on spending and businesses generally cut back on production. Recessions usually occur every 5 to 10 years and may last from 6 months to several years, followed by recovery when people start spending more as they become more positive about the economy. During recessions, individual firms may also reduce their spending on supplies, payrolls, and marketing, and just try to get by until consumer demand began to grow again. This is typical for many small enterprises who have limited cash available, inventory sitting on the shelves, and fixed costs for space, equipment, and utilities that may be difficult to reduce. So, what are the alternatives when facing an economic recession? First, know what is going on in your industry sector. Use your you can use the business canvas model to help with this. For the customer part, are you listening to current and potential customers? What feedback are you receiving? The problems customers may be reducing their own expense budgets. Will they want to buy your product or service while they cut back on their spendings? The alternative part, can you offer a downsized version of your product or service and still make a profit? Do you have leftover products on shelves that you can offer at a discounted price? The solution, giving new options to customers, invite them to find value in your business offerings. Customers may recognize that you are care about their financial situations and are willing to accommodate with affordable options. For the benefits, this allows you to maintain connections with customers even if the item purchased is just a portion of what they previously bought. For the advantage, both your business and your customers know we are in this together and we will overcome the recessionary challenges. For the message, consider mentioning in your marketing that you understand these are challenging times and that customer wants the right price for desirable products and service. You might offer a limited time special for a certain discount or matching a regular price product with another discounted product. For the distribution and cost, evaluate how you receive supplies and deliver products. Are they new supply chain opportunities that offer better or lower costs? Can delivery arrangements be adjusted to achieve more productively? For the revenue, and the bottom line is, how does all this impact your revenues and profits? Can you keep account receivable low to save on line of credit, interest charges, and maintain a healthy cash flow? You can also use the business canvas model to consider growth opportunities even during a recession. For the part of startup needs and costs, for instance, there may be suppliers that offer items at a discount, such as the equipment or inventory that you might use for a new or expanded product line. You may also discover firms that will package your products for less than normal cost. The solution: can you provide a lower cost luxury items that feels good to the customers when they face economic uncertainties? For instance, chocolate sales actually increased during some recessions when people wanted to make something to make them feel better. Can you do the same with one of your products or service? The message: can you use a messaging strategy for a customer appreciation promotion that brings in more sales and more satisfied customers? Cash flow for a business for any size is vital, especially during recessions, since banks and other lenders will generally tighten credit standards for new loans or line of credit. You want to be sure you have enough funds on hand to weather any economic storms that lower sales, raise borrowing rates, or restrict supplies from being delivered on time and within your budget amount. Staying on top of outstanding invoices with friendly reminder message, allowing online customers bank payments, and avoiding your own late payment fees on accounts payable are important steps for positive cash flow. Another exercise is to review how you price products and service. The normal method is input cost plus profit margin equals price. So if your cost is $85 and your profit is $15, the price would be $100. That is an understandable method most businesses use to determine their price, covering both of their business costs and their profit expectations. However, there is another method called the consumer surplus pricing model. It goes like this: try to identify in dollar terms what amount of value the, the consumer obtains from using your product. Measure how you can what the customer perceives as their benefits or enjoyment. Let's say you predict the customer's value at $130. Then say you want the customers to have a surplus in value above the price of the product. In this case, say a $20 benefit. Then your price would be $110. So using the example of the previous item cost, the business would be $85 in cost. In this updated example, both the consumer and the business obtain a benefit from the sale. The consumer has a surplus value and the business has a higher profit margin. It is very important in messaging with the consumer surplus pricing model that the business identifies and illustrates how the customer benefits from enjoyment feelings great about using the products and believing they are the center of attention from the business. Let's get on to key trends and opportunities. Here we have technological advances and their importance in driving innovation for a business. It highlights key technological areas that organizations should leverage to enhance their offerings, streamline operations, and stay competitive in the modern market. We have is automation, and that refers to the use of technology to perform tasks with minimal human assistance. In this context, it explicitly mentions AI and machine learning as key enablers. Good example, let's say using robotic arm powered by AI for assembling line tasks. You can also have an example of utilizing AI for personalized recommendations and target advertising, or like employing ML algorithms for fraud detection and risk assessment. Now, for digital transformations, it's the process of using digital technologies to fundamentally change how a business operates and deliver value to its customers. It's not just about implementing new technology, but about rethinking process, culture, and customers' interactions. Get that, for example, offering online shopping, personalized recommendations, mobile apps for in store assistance, and using data analytics to understand customers' behavior. Another would be providing online banking, mobile payment options, and using data analytics for personalized financial advice. Another would be utilizing online learning platforms, interactive digital content, and data analytics to personalize the learning experience. For the emerging technologies, those are not novel technologies that are currently under development or have recently become available and have the potential to significantly impact various industries. So basically, you want to explore opportunities in blockchains, IoT, virtual reality, augmented reality. For the e-commerce growth, this basically refers to the buying and selling of goods and services over the internet. The growth of e-commerce signifies a significant change in consumer behavior and retail landscapes. So, increasing shift towards online shopping, that's more and more consumers are preferring the convenience, variety, and accessibility of online shopping for a wide range of products and services. Digital payment solutions. The rise of e-commerce is accompanied by the increasing adoption of digital payment methods such as credit or debit cards, online payment platforms that's like PayPal, mobile payments that's like Apple Pay or Google Pay, or even cryptocurrencies. In this summary, this slide emphasizes that leveraging technological advances is no longer optional but a necessary for a business to thrive in a current environment. By embracing automation, undergoing digital transformations, exploring emerging technologies, and capitalizing on the growth of e-commerce, organization can drive innovations, improve efficiencies, enhance customers' experience, and ultimately achieve sustainable growth and a competitive edge. So we have its regulatory changes, and it highlights the importance for businesses to not only adapt to new regulations, but also to potentially leverage them for a competitive advantage. Here we have it outlined several key areas of regulatory changes that businesses need to be aware of. First, we have its compliance. Basically, it refers to the act of adhering to laws, regulations, rules, standards, and ethical guidelines relevant to your business operations. So basically, you want to stay updated with new regulations and ensures your business adheres to them to avoid penalties. We got data privacy laws, and that's our regulations designed to protect the personal information of individuals collected and perceived by organizations. Basically, you want to adapt to General Data Protection Regulations, CCPA, and other data protection regulations to build customers' trust. Now we have industry specific regulations, and these are the regulations that are specific to the particular industries in which a business operates. They address the unique risks and challenges associated with that sector. Basically, you want to have monitor changes in regulations specifically to your industry. That's like healthcare, finance, food and beverage, or transportation. The importance of compliance is that compliance with industry specific regulations is often critical for obtaining license to operate, ensuring product safety, maintain ethical standards, and avoid severe penalties. Now, for the last one, we have sustainability requirements, and those are regulations and standards related to environmental protection and sustainable business practices. Basically, you want to align with environmental regulations to meet consumers' demand for green practices. For the overall summary, this slide emphasizes that regulatory changes are a consistent factor in a business environment. Proactive engagement with these changes, including ensuring compliance, adapting to data privacy laws, monitoring industry specific rules, and aligning with sustainability requirements, is not just about avoiding penalties, it can also be an opportunity to build customer trust, enhance brand reputation, meeting evolving consumer demands, and potentially gain a competitive edge in the marketplace. For the market shift, this emphasizes the importance of identifying and understanding significant changes in consumer behavior and overall market demand. Adapting to the shift is crucial for businesses to remain relevant, competitive, and sustainable. This slide breaks down market shifts into the four key areas. We have consumer behavior. Basically, it refers to a study how individuals make decisions when purchasing, using, and disposing of goods, service, ideas, or experiences to satisfy their needs and wants. Market shifts in this area involve significant changes in these patterns of interaction. To give the examples, we could say increased reliance on online shopping and mobile commerce, growing demand for fast and free shipping, expectation of personalized product recommendation based on past behavior, or preferences for brands that offer seamless omnichannel experiences, or like increased use of social media for brand interactions and information gathering. For the economic conditions, that basically refers to the overall state of the economy, including factors like economic growth, inflation, unemployment rates, interest rates, and consumer confidence. Fluctuation in these conditions can significantly impact consumer spending over and business investment decisions. Give an example like increased price sensitivity and demand of value during a recession, higher demand for luxury goods and experience during economic booms, changes in consumer confidence impacting major purchase decisions, or business delaying or scaling back investments during a period of economic uncertainty. We have social changes, basically refers to significant transformations in the norms, value, attitudes, and behaviors within a society or specific social groups. Good example, growing demands for representation in advertising and media, increased scrutiny of companies' diversity and inclusion efforts, preferences for brands that aligns with social justice values, or needs for accessible products and service for people with disabilities. And last, we have is globalization, basically refers to the increasing interconnectedness and interdependence of countries through the exchange of goods, service, information, and capital. Give that example, increased opportunities for e-commerce business to sell internationally, growing needs for businesses to understand and comply with international trade regulations, challenges related to managing complex and geographically dispersed supply chain, or increased competition from global players in domestic markets. In summary, understanding and adapting to the market shift across consumer behaviors, economic conditions, social changes, and globalization is crucial for businesses to thrive in the long term. By proactively monitoring these trends, businesses can identify new opportunities, mitigate potential risks, and tailor their strategies to meet the evolving needs and expectations of their customers and the broader marketplace. Let's go for strategize for both consumer surplus and business profits. We have the value proposition, which is the core promise of value that a company offers to its customers. It's the reason why a customer should choose your products or service over the offerings of competitors. The slide emphasizes enhancing your value proposition to maximize consumer satisfaction and outlines four key strategies to achieve this. First, we have enhanced offerings, and this strategy focuses on making your core products or service more valuable to the customers than what your competitors are offering. This can be achieved through various means, such as improved features, better performance, higher quality, or a more comprehensive solution. How to enhance it? You want to improve core functionality. That means make your products work better, faster, or more effectively. Add new features that incorporate innovative features that address unmet customer needs or provide additional benefits. Increase quality that basically use better materials, implement stricter quality control processes, or offer greater durability. And offer a more complete solution that means bundling your product or service with complementary offerings or support services to provide a more holistic solution to the customer's problem. Now on to unique selling points, that's USPS for short. And these are the specific benefits or characteristics of your product or service that differentiate it from the competition, and provide a compelling reason for customers to choose you. Get that, for example, superior quality that's the most durable and long lasting products on the market, innovative feature that's the only product with specific cutting edge technology, exceptional customer service that's 24/7 dedicated support with a genuine response time, lower prices that's the most affordable options without compromising on essential features, unique design that's distinctive and aesthetically pleasing design that stands out, or specialized expertise that's backed by years of industry leading experience and knowledge. Importance of communication once you identify your USPs is crucial to clearly and consistently communicate them to your target audience through your marketing and branding efforts. We have customization that involves adapting your product or service to the individual's requirement and preferences of your customers. This can range from minor adjustments to fully bespoke solutions. Give an example like software, like allowing users to configure features and functionalities based on their workflow. Manufacturing that's offering build to order options with various specifications and materials. Retail that's providing personalized recommendations based on past purchase history and browsing behavior. Or services that's tailoring service package to meet the specific needs and budget of individual clients. And last, we have sustainable practices that involves operating your business in a way that minimizes negative environmental impact and contributes to long-term ecological health. Give that for example, like using recycled or biodegradable packaging, sourcing materials from sustainability managed forests or farms, implementing energy efficient manufacturing processes, offering products take back and recycling programs, or communication your sustainability efforts transparency to consumers. Enhancing your value proposition is a continuous process that involves understanding your customers' needs and desires, analyzing your competitive landscape, and strategically developing and communicating what makes your offering superior and unique by focusing on enhancing offerings, highlighting unique selling points, providing customizations, and incorporating sustainable practice. Businesses can maximize consumer satisfaction and build a strong competitive advantage. Now we got the cost structure that emphasizes the importance of optimizing costs to ensure profitability while still delivering value to customers. And this outlines four key strategies for managing and reducing costs within a business. We have cost efficiencies, and it's about producing goods or services with a minimum amount of resources that's time, money, material, labor without sacrificing the quality of the output. Give that, for example, implementing just in time inventory management to reduce storage costs and material waste, automated repetitive tasks with software to reduce labor costs and errors, optimizing production layouts to minimize movements of materials and workers, or negotiating better prices with suppliers for raw materials. Next, we have is economics of scales, and that refers to the cost advantage that a business gains due to increased output as production volume increases. The cost of producing each individual unit tends to decrease. While economics of scale can be beneficial, businesses need to ensure that increased production doesn't lead to inefficiencies in other areas, such as managing larger inventories or coordinating more complex operations. For the outsourcing, that involves contracting out specific business functions or processes to external specialized providers. These providers can often perform these activities more effectively or at a lower cost than if the company handled them internally. You need to consider it's important to carefully evaluate potential outsourcing partners, ensure clear contract and service level agreement, then manage the relationship effectively to avoid issues related to quality control, communication, and data security. Now we have is lean management. And its a philosophy and set of tools and techniques focuses on maximizing value for the customers while minimizing waste within an organization. It aims to create a lean enterprise by eliminating anything that does not add value to the final product or service. The key of lean techniques would be value stream mapping, that's visualizing the entire process to identify areas of waste, just in time, that's producing goods only when they are needed to minimize inventory, pull systems that's production is triggered by customers' demand rather than forecasts, or the total quantity management focuses on preventing defects and ensuring quality throughout the process. The benefits of lean management would be reduced costs, improved quality, faster lead times, increased efficiencies, enhanced customer satisfaction, and better employees' engagement. By optimizing the cost structure is a critical aspect of ensuring a business profitability and sustainability. By focusing on cost efficiencies, leveraging economics of scales, strategically considering outsourcing, and implementing lean management techniques, business can reduce unnecessary expenses, improve operational efficiencies, and ultimately greater deliver value to their customers while maintaining a healthy bottom line. For the revenue streams, this emphasizes the importance of diversifying how a business generates income to achieve stability and growth. We have diversification in revenue streams, meaning generate income from various different sources rather than relying heavily on just one product, service, or customer segment. To give that, for example, let's say a software company that primarily sells license could also offer subscription-based access, training service, consulting, or develop complementary software add-ons for additional revenue. Or a restaurant could offer catering service, selling merchandise, or create meal kits for home delivery. For the subscription models, it basically involves charging customers a recurring fee that's typically monthly or annually for ongoing access to a product, service, or content. Really, for the benefits for customers, that subscriptions often offer convenience, cost saving compared to individual purchases, exclusive content or features, and a consistent experience. Give that, for example, streaming service like Netflix or Spotify charging monthly subscriptions for content, product subscriptions for regular deliveries for consumable like coffees, razors, or meal kits, or membership based business like gyms or exclusive clubs charging recurring dues. For the upselling and cross selling, basically, these are sales techniques aiming at increasing the value of a customer's purchase. Give that, for example, like for the upselling, a car salesperson conveniently a buyers to upgrade to a model with more features, or a software company offering a premium subscriptions tier with additional functionalities. For the cross selling example, like a customer buying a laptop being offered a computer case, mouse, and software bundle, or cross selling a restaurant server suggesting a appetizer, side dish, or dessert to a customer who has ordered a main course. For the dynamic pricing, also known as surge pricing or time based pricing, is a strategy where businesses adjust the prices of their products or service in real time based on factors like current demands, competitive pricing, time of day, seasonality, and customers' characteristics. Get that, for example, airlines and hotels adjusting tickets and room prices based on demand and time of booking. E-commerce retailers charging prices based on competitors' pricing and real-time demand, or movie theaters offering discounted tickets for matinee showings. By developing diverse and optimized revenue streams is essential for the financial health and growth of a business. By diversifying income sources, implementing subscription models, leveraging upselling and cross selling techniques, and strategically using dynamic pricing, businesses can create a more stable revenue base, enhance customers' relationship, and maximize their earning potentials. We have this customer's relationship, and that highlights the importance of strengthening these connections to foster loyalty and encourage repeat business. We have is personalization that involves tailoring your market messages, product recommendations, service offerings, and overall customer experience to the individual preferences, needs, and behaviors of your customers. This is often by insights derived from data analytics. Get at, for example, sending personalized products recommendation based on a customer's past purchases, tailoring email marketing message with the customer's name and specific offers relevant to their interests, displaying website content or promotion based on a visitor's browsing history, and providing personalized customer service interaction by referencing past issues or preferences. We have is loyalty programs and also our structured marketing efforts that reward customers for their continuing patronize. These programs aim to incentivize repeat purchases and foster long-term customer relationship. There are types of loyalty programs as you know. There is point-based systems, tier programs, subscription-based loyalty, and cashback programs. For examples of loyalty programs, let's say airlines frequent flyer programs offering rewards like free flights and upgrades. Retail stores offer points or discounted for every dollar spent, or coffee shops offering a free drink after a certain number of purchases. For the customer support, encompasses all the interactions and assistance provided to customers before, during, and after a purchase. Excellent customer service aims to resolve issues, answer questions, and ensure a positive experience for the customer. To get at for examples of excellent customer service, you want to providing a quick and helpful response in inquiries, going above and beyond to resolve customer issues, offering proactive support and anticipate customer needs, training support staff to be acknowledgeable and empowered, and making it easy for customers to contact support through their preferred channels. And we have is community buildings, and this involves creating a space where your customers can connect with each other and with your brand, fostering a sense of belonging and shared identity. The benefits of community building would be increased loyalty, brand advocacy, valuable feedback, and stronger brand identity. GitHub, for example, create a dedicated Facebook group for customers to share tips and experience with your product, hosting online forums or discussions board on your website, organizing your users' conference or meetups, and running social media campaigns that encourage customers' interactions and content sharings. By building strong customer relationships is essential for long-term business success. By focusing on personalization, implementing loyalty programs, investing in excellent customer support, and fostering a sense of community, business can cultivate customers' loyalty, increase repeat business, and ultimately drive sustainable growth. Now, here in this image, we have three strategies for balancing consumer surplus and profitability. This concept is fundamental to pricing strategy and aims to find a sweet spot where customers feel they are getting good value while the business is still able to generate sufficient profits. Let's break it down to each of the strategies. First, we have is limited offers, and how is this balanced that this can increase customer surplus by providing a temporary opportunities to purchase a product or service at a lower price than usual. This creates a sense of urgency and encourage price-sensitive consumers to make a purchase they might otherwise delay or forego. For the business, limited offers can drive sales volume, attract new customers, clear inventory, or generate excitement, ultimately boosting profitability during the offer period. For the loyalty program, House is balanced that it rewards repeat customers with exclusive benefits, discounts, or special offers. This increased consumer surplus for loyal customers over time as they receive added value for their continued business. For the company's loyal programs foster customers' retention, encourage repeat purchases, and can increase the lifetime value of each customer, thus enhancing long-term profitability. For the bundling and cross-selling, and how this balance is that for the bundling part, that offering two or more products or services together at a single price that is lower than the sum of their individual prices can increase consumer surplus by providing a perceived discount and added convenience. For the business, bundling can increase sales volume, move less popular items, and potentially increase the overall transaction values, leading to higher profitability. For the cross selling part, this basically suggesting complementary products or service to a customer during a purchase can increase the overall value they receive, mainly potentially increasing their surplus if the items are generally useful together. For the business, cross selling directly increases revenue per transactions and can enhance customer satisfaction by providing a more complete solution. In conclusion, these three strategies limited offers, loyalty programs, and bundling and cross selling represent different approaches to pricing and value delivery that aims to strike a balance between providing value to consumers and ensuring the profitability of the business. The effective implementation of these strategies require a deep understanding of the customer's behavior, market dynamics, and the perceived value of the offerings. On to our last agenda will be identify the next steps for business success. Here in this slide, we have the image of cyclical diagram. And this outlines 7 steps to ensure your business stays up to date. While the diagram itself is somewhat general and leans towards financial preparedness and long term visions, we can interpret each step in the context of keeping business current and relevant in a dynamic environment. Let's go for each step now. First, we have a clear and concise business plan. So basically, a business plan isn't a static document. To stay current, you need to regularly review and revise your business plan. And this involves market analysis, strategic review, goal adjustments, and innovation planning. On to the second step, we have grow your business with right team. Basically, your team is crucial for staying agile and responsive to change. And this means talented acquisition, continuous learning and development, fostering innovations, and agile structures. For the third step, we have get your financial house in order. Basically, sound financial management provides a stability and resources needed to adapt to change. And this involves accurate and timely financial reporting, budgeting and forecasting, cash flow management, and financial technology adoption. On the fourth step, we have built a strong relationship with your financial institutions. Basically, strong relationship with banks and other financial partners can provide access to capital and advice needed for growth and adoption. And this means regular communications, understanding financial products, and seeking advice. On to the fifth step, you have keep your financial ratios up to date. Basically, monitoring key financial ratios helps you assesses your business health and identify areas that need attention in a changing environment. And this includes liquidity ratios, profitability ratios, efficiency ratios, leveraging ratios, and benchmarking. For the managed exceptions, this likely refers to managing exceptions internally and externally. Regarding changes and the pace of adoption, this involves realistic communication, change management, customers communication, and iterative approach. On to the seventh step, we have focus on the long term. Basically, while addressing immediate needs is important, a long term perspective is crucial for sustained relevance, and this involves visionary leadership, strategic foresight, investment in innovation, and sustainability. In summary, the steps outlined emphasizes a proactive and continuous approach to ensuring your business remains up to date. It's not just about reacting to changes, but also about anticipating them, building a flexible and adaptable organization, and maintaining a strong financial foundation to support ongoing evolution. Now, let's talk about what are some steps that you can take to ensure that your business will be successful in the future. Each step right here represents a crucial element for long term viability and growth. First, we have is plan for success. Having a well defined plan is a foundation for future success. It provides directions, helps you anticipate challenges, and allows you to measure progress. This involves developing a comprehensive business plan, setting clear and measurable goals, forecasting and budgeting, risk assessment and mitigation, and regular review and adaptation. Next, we have is research your industry and your competition. Mainly stay informed about your industry and understanding your competitors is crucial for making strategic decisions and maintaining a competitive edge in the future. And this involves industry analysis, competitive analysis, customer research, and benchmarking. Third one we have is build a strong team. Your team is the engine of your business. A strong, compatible, and motivated team is essential for executing your plans and adapting to future challenges and opportunities. And this involves talented acquisition, training and development, fostering a positive and productive culture, effective communication and leadership, and recognizing and rewarding performance. The fourth one you have is focus on your customers. And in the long run, your business success hinges on meeting and exceeding customer needs and building strong, lasting relationship. And this involves customers centric approach, understanding customer needs, providing excellent customer service, building relationship, and anticipating future needs. And on to the last one we have is constantly strive for improvement. The business landscape is constantly evolving. To maintain successful, you must embrace a mindset of continuous improvement and adaptation. And this involves embracing innovation, seeking feedback, analyzing performance data, implementing changes and learning from mistakes, and staying agile and flexible. Now, on this slide, you want to know why it matters and how to improve it. And this focuses on the importance of financial health for a business and providing actual steps for improvement. First one we have is keep your financial statements up to date. As to why it matters, up to date financial statements like income statements, balance sheets, and cash flow statements, like I talked from the previous videos, they provide a clear and current snapshot of your business financial health. This allows you to track performance, make informed decisions, identify trends, secure fundings, and manage cash flow. And how do you to improve it? You want to establish a regular accounting schedule, utilize accounting software, reconcile accounts regularly, and seeking professional help. For the second part, we have check your credit report regularly. As to why it matters, your business credit report impacts your abilities to secure loans, favorable credit terms with suppliers, and even insurance rates. Errors or negative information can hinder your growth and increase costs. And to improve how to improve it, you want to identify credit bureaus, obtain your reports, review your accuracy, dispute errors promptly, and monitor your credit score. On to the third one, you want to pay your bills on time. As to why it matters is that consistent on time bill payments is fundamental to building a positive business credit history and maintaining good relationship with suppliers and creditors. Late payments can result in negative credit reporting, late fees and penalties, strained supplier relationships, and legal actions. And how you can improve it is that you want to establish a bill payment system, set up payment reminders, automate payments where possible, and communicate with creditors. For the fourth one, you want to keep your credit utilization low. As to why it matters is that credit utilization is the percentage of your available credit that you are currently using. High credit utilization signals higher risk to lenders and can negatively impact your credit score even if you pay on time. How to improve it, you want to pay down balances, avoid maxing out credit limits, consider requesting credit limit increases, and avoid opening unnecessary new credit accounts. On to the fifth one, we have maintain positive business liquidity. As to why it matters is that liquidity refers to your business ability to meet its short-term financial obligations. With readily available cash or assets that can be quickly converted to cash, positive liquidity ensures you can operate smoothly and handle unexpected expenses. How you can improve is that you want to monitor your cash flow, manage inventory effectively, optimize accounts receivable, negotiate favorable payment terms, and build a cash reserve. And as for the last one, we have consider a financial growth strategy to decrease costs or increase revenues. As to why it matters, a proactive financial growth strategy ensures the long term sustainability and profitability of your business. It involves actively seeking ways to improve your bottom line. And how to improve it, you want to cost reduction analysis, revenue enhancement strategies, investment in growth, and regular financial planning. In inclusion, the diagram emphasizes the interconnectedness of these six financial aspects by constantly focusing on maintaining accurate financial records, managing credit responsibly, ensuring sufficient liquidity, and actively pursuing a growth strategy. Business can build a strong financial foundation that supports both short term stability and long term success. So that's it for this training session in our free 10-part on-demand videos business finance training series. Thank you for watching, and please subscribe to us here at William Factory for more videos on how to launch and grow your business. You can also find us on LinkedIn, Facebook, and Instagram. Start revisiting your business canvas model to spot key trends and opportunities and plan next step today. This series is made possible with the grant from the Washington State Micro Enterprise Association. Thank you.